Hi, everyone. This is Matthew Cruz with Comstock Investments. I'm going to be sharing with you the September 2023 USDA supply demand report that came out this morning. As you probably noticed, we are down pretty hard in the markets. We're down right now about 9.5 on December corn and 21.25 in November beans. We'll take a look here at why the markets are so negative here this morning. Taking a look at the report. I do have to share my disclaimer with you. I'll let you read through that real quick here, and then we'll kind of jump right in. Taking a first look at whoop, got ahead of myself there. We'll look at old crop here, ending stocks. There were some minor adjustments made there. They did reduce the ending stocks by just 5 million bushels, and that was mostly because they actually increased the exports by 40 million bushels, which was good news. We've been saying for a while that demand hadn't been quite as negative as what people are saying. However, they did offset a lot of that with reduction in ethanol, and so by 30 million bushels. And so that's why we see we're down 5 million bushels in production, old crop production, ending stocks from last month. Looking at the soybeans, similar situation. They actually increased exports by 10 million bushels to the old crop, and that's why we see that reduction from 260 million bushels to 250. Getting here to the good stuff, looking at grain ending stocks, where it came in at 2.22 billion bushels in the corn. So it was actually added 20 million bushels, and the average trade was looking for 2.13. And so that's why the corn market is down 9 cents right now, just because they're actually looking for a reduction overall in the ending stocks, and we came in a little bit higher. Now soybeans is a little bit hard to explain. I'm not sure I can. Last month we were at 245, and we actually did end up shaving off 225 million bushels, and so that was good. Not too far away from what the average trade was looking for at 213 million bushels, but yet we find ourselves down 21 cents right now. And so I think just a lot of perhaps the corn and the wheat market is dragging the beans down. There's really no reason for the beans to be down this hard. I think that with ending stocks as tight as they are, 220 million bushels, I mean, it's still very, very tight going into next year. And there's we'll get into a little bit why that they made the adjustments that they did. Wheat, the USDA didn't touch the wheat. We stayed at 615 million bushels, so no changes there. Looking at overall production, the crop size, they were expecting that to be just under 15 billion bushels, and we came in at 15.13 billion bushels. And so we actually did get that yield cut that the market was expecting, right? We were at 175.1 bushels per acre last month, and the trade was looking for at 173.4. So they did cut that to 173.8, and so what is that, about 1.3 bushel cut per acre? So not too far off, pretty close. However, there had been a lot of discussion that the FSA acres were lower than what they were expecting. And so we had talked about maybe in our report that they were going to add another 1 million acres potentially to the planted or harvested acres, and that's what they did do. And so a lot of the cut in the yield was offset by basically adding 800,000 acres. And so that's what you can see here. We're at last month at 86.3 million harvested acres, and they bumped that up to just over 87 million acres. So unfortunately, that's why we see, despite a reduction in yield, we see a bump in higher in the corn carryover. Similar situation looking at soybeans. The average trade was looking for 4.15. Not major changes there. We came in at 4.14. They actually did reduce the yield right on target. The trade was looking at 50.1. Look at that. The USDA came in at 50.1. So the trade did a very good job of kind of estimating are guessing what the USDA was going to come in at. They did offset a little bit of those gains by increasing harvested acres by 100,000. And so we went from 82.69 to 82.79. And so really close to what the average trade was looking for. I still think that there's a room lower yet, just with this dry heat that we've had. I think, it's certainly possible we could shave off another bushel in the beans, maybe another couple bushels in the corn. And at that point, USDA is kind of running out of excuses here, to kind of offset those losses. They've made some big changes here late in the season, to those adjusted acres that's offset some of that demand. But I see no reason why long term, or at least, in the next 3 months, while we can't go back to contract highs on the soybeans, the ending stock scenario is just so tight right now. You shave off another bushel, that basically takes off another 82 million bushels. Now, granted, the USDA is going to offset some of that by reducing crushings and exports, but that would see us go below the 200 million bushel level, which at that point things become very dangerous. You're going to run out of beans, I think. So really, at anything below 300, in my opinion, is very tight, and we're already well below that and could go lower yet. So that situation maybe obviously isn't quite as tight in the corn, but I still think that there's a lot of argument to be made for shaving off another bushel or two in the corn yield, going forward. So looking at global demand, no big changes. They didn't change anything to the Brazil soybean crop here from last season, 156 million metric tons. They did add 2 million metric tons to the corn. I am not there. I think that's getting a little bit ahead of themselves yet. I think the crop in Mato Grosso has already been harvested now and done basically for a month, and they haven't made any adjustments, and that's the biggest producing state by far. And so I think that CONAB is like 5 or 6 million metric tons below this. Looking at soybeans, no changes in Argentina at 25 million metric tons, 34 in the corn. And again, no changes in the Ukrainian corn and wheat at 27 and 21.5 million metric tons, respectively. Breaking down the corn balance sheet, this is where we see an increase of 800,000 acres in the harvested area. And then we see a reduction of 1.3 bushels in yield. So we see we talked about the reduction in 5 million bushels in beginning stocks from old crop. And so we're already off starting with 23 million bushels more in production just from that increase in harvest acres. And so you subtract that out, really without, other than the harvested acres increasing, they didn't make any adjustments to exports or feed or ethanol, any of those things. And so we're still kept that those ending stocks high at 2.22 million bushels, and that's how we ended up there. Looking at soybeans, we see that an addition of 100,000 acres in harvested area, reduction of 0.8 of a bushel, down to 50.1. Now we see a lot of changes here with production down 59 bushels. Imports, they left it unchanged. So overall supply is already down by 70 million bushels. Now this is where they begin to add things back, where they reduce crushings by 10 million bushels, reduce exports by 35 million bushels. And so we're taking that loss of 70 million bushels and loss in production, and we're adding back 45 million bushels. And that's how we get that difference of 25 million bushels that we took off. And we go from 245 down to 220, which the frustrating part, that's really not far off from what the average trade was looking for. And yet the bean market is down 21 cents as I speak here. And so there's really no reason for the bean market to be down, other than it's just getting drugged down by outside markets, with corn and wheat being down the way they are. Looking at wheat, as I said, there's really no updates. They didn't change anything at all, and so we kept those ending stocks at 615 million bushels, and so yield and all that stayed the same. Looking at the charts here, we can see that corn obviously has just been having a rough time getting anything going, and just steadily been trading lower, and we're basically at the contract bottoms here right now. I think we went and retested those right now. We'll see if those hold here, but we're at 475 and a quarter right now. I think we're traded just below 474 at one point, and yeah, I think the big problem with the corn has been the wheat market. It's just every couple of weeks it's been making a new low. Can't seem to get anything to go in there. You would think that it's gotten cheap enough that it would bring in some increased demand, but we'll look at that chart in a second. This has been disappointing here. We're looking at the soybeans with the stocks as tight as they are. You know, I would say the report was neutral to maybe even slightly positive, depending on how you want to look at it. But here we, you know, we were down darn near 30 cents at one point, and we've gained some of that back. We'll see where we end up at the close, but you know, where our contract high is someplace closer to this 1450 level, and so you know, it's going to take a while, but that's kind of where I'm looking for soybeans to head in the future. Now, you know, despite the bullish prospects in the bean market, you know, it doesn't mean that the market trades in a straight line, and so you know, we're going up and going down, and so that the market needs time to kind of digest these reports right now, and kind of break free from the negativity, I think, in the corn and the wheat. Looking at the wheat, I mean, it just looks like absolute crap. There's no other way to put it here. I mean, every couple of weeks we're just going down and making a new low. Now, if I look at the wheat chart right now, oh, we're actually positive. You know, we were down at one point, but it looks like, at least for today, you know, this isn't the close, that we've maybe found some footing. And so you know, the market's changed so much. When I took this image, you know, we were down a little bit, and now we're up 5 cents in the wheat. And so I like that it's bounced off its highs for the day. Hopefully you know, we're building some footing here. It'd be nice if we kind of closed and it looked like this, where we left a long tail to the bottom here, but that or even this here, and kind of begin to move higher. But that is yet to be seen, I guess. And so we'll kind of see what happens, but it would help a lot for the corn market to turn around if the wheat would stop going down, and we need that I think to happen, because it's just been an anchor kind of weighing around the neck of the corn market. So kind of wrapping up here, if you're a bull, you're going to point to the smaller crop ideas. You know, you talk about the Ukraine corridor, you know, has effectively been shut off, and that basically reduces Ukraine's exports effectively by 30, maybe 40%. A lot of it's still getting out through you know, by road and through the Danube River. And what does get out is not near as efficient, costs a lot more to get out, right? And so the cost, they're exporting quite a bit less, and then the cost to what they are exporting goes up by 30-40%, which can make those products cheaper and hurt their basis there, and of course in the Ukraine and Eastern Europe. You know, I would point out that we got cheap grain right now, and so, you know, anytime the grain gets this cheap, I think it does generally improve the demand situation. And so I guess I'm not quite as negative on China. I think that you know, starting out for new crop exports, things have been pretty decent so far. And as we just saw, they made adjustments higher to old crop. They actually increased exports, and so all we ever heard kind of coming into you know, the season, and how bad the exports are, and yes, they are off from what we projected, but I think they've overdone it a little bit, is what I'm trying to say. You know, the USDA is still projecting pretty healthy exports for going to China. I think ethanol margins are positive. We got strong crude prices right now, which has got to help the ethanol industry as well. And so I think maybe they're overdoing some of those demand cuts a little bit. Looking at if you're a bear, you know, you're going to point out, hey, we just found almost 1 million acres more that we didn't know we had. I don't quite know how that happens. I think FSA maybe was slow to update their information there, but and there had been some rumblings in the market that this was going to happen, and we even talked about it in our report, you know, for the last 3 weeks or more, that hey, we think that they might be increasing some acres, and so it wasn't necessarily a huge surprise, but we were hoping that it was gonna maybe not be quite as bad as what it was. And so you could also point out that you know, these new drought resistant varieties maybe took this late season drought hit a little bit better than what people give it credit for. I've seen that on our own farm, that you know, while there is a yield drag maybe, but it could still handle that drought quite a bit. You know, you could talk about that, you know, Russia is undercutting a lot of the wheat market right now, and that's why wheat prices continue to just get hammered here. Is that you know, the loss in production, wheat production in Ukraine, is being offset basically by increased production in Russia, and they're just kind of flooding that market and selling at whatever price they need to get it sold and exported. Of course, rising interest rates are going to affect every sector of the economy and could affect the potential demand. And then going forward, you know, Brazil and Argentina are very bullish on their productivity for next season, and they're both looking at a rebound in production, especially in Argentina. And so longer term, that's going to have an effect on prices. So I want to thank everyone for watching. Please subscribe to our YouTube page here. If you have any questions, as always, give us a call at 712-227-1110. And for more premium content, you can subscribe to our report at Comstock.com. Thank you, and have a nice day.